Hello, everyone. Thank you for signing in and logging into view this edition of GFA Attract, where we hold conversations with several venture capital partners who are active in Africa. Today, we have the opportunity to actually speak with Simon, who is a principal at Modus Capital. Simon is a finance professional with over 10 years of experience across various verticals and industries, including banking, manufacturing, and defense services. Prior to his most recent role, Simon led the financial performance and strategy of the debt protection product, a tangential product offered to credit card customers at Synchrony Financial, which generated over $300 million in revenue annually. In addition, Simon held various roles in the risk management team and played an integral role in the IPO process of Synchrony Financial. Simon also has consulting experience with the Hackett Group, where he supported the lead transformation projects focused on best practice implementation and process optimization. Simon attended the Northeastern University for his undergraduate studies at NYU Stern for his graduate studies. Once again, everyone, I'd like to welcome our very special guest, Simon Tkachenko, principal at Modus Capital. Hi, Simon.
Hey, how are you? Thanks for having me.
Great. Thanks so much for agreeing to talk to the African entrepreneurs out there, and we look forward to actually learning a lot about what you're doing at Modus Capital.
Yeah, it's a great program. Looking forward to talking to you.
Great. So, Simon, first of all, they always say it's human beings that are behind all organizations. So, first of all, before we start talking about models, we'd also like to know, a little bit about you, your background. Who is Simon?
Sure. Thanks for having me once again. So I know you covered some of my professional background, but a lot of my experience started in finance, and I studied finance and international affairs at Northeastern University up in Boston. After graduating, I went straight into finance, thought trading was my future, so I was on a fixed income desk trade that focused on treasuries and government-backed mortgage-backed securities, which I quickly realized there's not a whole lot going on in government debt. So after about 2 years of that, I moved to, as you mentioned, Synchrony Financial, which at the time was the consumer financing arm of GE Capital, General Electric. And this was right after the financial crisis when GE Capital was under a lot of pressure. So it was pretty quickly determined that the consumer finance arm would spin off and become their own company, which became ultimately Synchrony Financial. So when I joined Synchrony, I was on the corporate risk team, and they were primarily focused on ensuring that all regulations were abided by in terms that were put in place by the Federal Reserve Bank for Synchrony to be able to IPO and be a standalone company. So after the successful IPO, I transitioned internally to a corporate FP&A role. And I think looking back at my career so far, that was probably one of the best roles I had because it really made me hone my skills on financial planning and analysis, FP&A. So setting budgets and then ultimately executing on budgets throughout the year, which was important. And not only executing on budgets, but adapting to the environment as things change and reforecasting and seeing how that impacts the business. So that was a ton of learnings from that role. And somewhere I think that was around year 6 or 7 after graduating, I realized, man, I've been in pure finance roles for about 7 years now. I think I need to broaden my experience. So that's when I started doing a part-time MBA at NYU. And I decided that consulting was probably the best way for me to get a much broader experience. And so that's when I started applying to consulting jobs and ultimately got a job at the Hackett Group, which was a management consulting firm and it was basically a crash course in different industries, as well as seeing the operations done well, done very poorly.
Exactly what you wanted.
It was exactly what I wanted. And then after consulting for a few years, somewhere in that time, we can get into it, I met Kareem El-Sarafi, who's the founder of Modus, and started working for Modus Capital about 2.5 years ago now.
I mean, you've kind of like segued into that, so I definitely want to ask you about Kareem and Modus Capital. How did that, was it a chance meeting? Were you guys, were you in the lobby and then he just looked at you, hey, how'd that happen?
It was pretty interesting. It was almost a chance meeting. My friend in New York interviewed for a job with Kareem, and he was the one that actually introduced us and said, you guys should meet. You guys have very similar views on the world. I think it'd be a great opportunity for you to meet. So we met and spoke to Kareem for a little bit, learned about Modus and what they do, and learned about Kareem, and kind of the goals and how they work really stuck out to me. So I actually offered to work for free on any ad hoc projects around operations or financial modeling that came across Modus Capital. And at the time, Modus was just starting up and it was very early. So worked for free for about a year and a half with Kareem, really got to know him, and eventually went full time.
I just have to ask this, forgive me. Your friend did the introduction. Did he get the job?
It was, he did get the job. It was also on a consulting basis.
Okay.
And he does a lot of sales consulting. So, yeah, he got it.
Okay. I was just going to ask, if he got the job and if you guys were still friends.
Yep, still friends.
Thanks for that. And we'll come a little bit into that. But, could you tell us a little bit about Modus? I mean, you mentioned Kareem and the early days and all that. Could you kind of like tell us a little bit about Modus?
Sure. So Modus Capital is a unique VC in that we offer capital, because that's obviously important for a company to grow. But we have a full service agency or operations team that supports the venture capital arm of the business. And they really function under two mandates. The first is to complete the due diligence process before investment is made. And the second is to fully support portfolio companies after investment. And what I mean by fully support, it's basically a backstop for companies to tap into our resources, whether it's digital marketing, technology, tech engineers, product build. We really do the full gamut of what a startup may need, and we offer that support, as well as the operational support and the more of the management and strategy support. So it's really there as your backstop, but also to help guide you and lead you. And really what we tell founders is we're there to help you avoid first-timer mistakes. We've done it. We've raised capital. We've exited companies. And so we've made the mistakes that we hope to help you avoid.
Well, what kind of check sizes do you typically write?
So it depends on the stage of company. We do anything from ideation, so before it's even a business, we engage with just a subject matter expert that needs the help of founding a company, all the way through to a Series A. So on the earlier stage, it's 50 to 100,000. As you get into the seed and Series A, it grows up to 250, and then above a series or towards the Series A, it'll go anywhere from 250 to 500.
Okay, so basically, Modus Capital invests between $50,000 to $500,000 thereabouts for startups. Are there any interesting ones that you held in Africa? Any interesting investments you had in Africa recently?
Yeah, I think one of the more interesting ones, and it just so happens to be the most recent one, is Pravica, which used to be D-Mails, but they're out of Egypt, and they are a company that's in the blockchain space, and they offer a full communication suite for individuals and businesses. So email, chat, call, storage, calendar. And since they're on blockchain, their value prop is that users own their data. So it's not Gmail or Yahoo that owns all the data that comes in and out. It's you, the user, that owns it. And we liked this company before COVID, but I think COVID really exacerbates the need for companies like this, because everyone is at home, their data is online more and more. And we talked about this.
Yeah.
Everyone is a public figure because your data is everywhere. So this puts the power back into users' hands where they own their data. So really excited to see them grow in this space.
That's very nice. I mean, generally speaking, though, what, in your opinion, what would you say is kind of like holding back investment into more companies like this, well, across Africa in particular?
That's an interesting question, because holding back, to me, I think there's definitely things that can open the floodgates of funding to come into Africa. And I'm going to speak from the perspective of Egypt just because that's what I know.
Yeah.
There's definitely things holding back, but I do want to, before diving into those, if you look at the data, whether it's number of deals or dollars flowing into startups, it's been growing exponentially quarter over quarter. So cash is flowing in, but I think you're right in that there could be more. Yeah. So it, for me, comes down to two main components. The first is government regulation, and I think governments have done a great job of adapting and acting quickly to facilitate the startup ecosystem to growing, but there's still more they can do. If you look at, I know it's not a perfect metric, but the ease of doing business metric that the World Bank puts out, if you look at countries like Egypt, Kenya, it's been improving year over year, but it still doesn't stack up to something like the UAE or Singapore. It still has a ways to go. So that I think is number one. And then number two is the type of mechanisms that are in place that support entrepreneurs. And that mainly comes from the type of investors that are there, because there's really not a shortage of programs or funds available to entrepreneurs, but it's the type of support that they offer outside of capital. Capital is there, and we talked a little bit about the Modus model of offering operations support. And so I think there's more and more skilled investors that are entering the ecosystem. I think they'll come, but I think there's just not enough people that have seen the full life cycle of a company, so from ideation to exit, in the ecosystem yet. And I think that's what a lot of entrepreneurs are lacking, is that guidance throughout the whole life cycle. Because accelerators are great for the short period of time, but then there's a drop off. And that's what we're seeing, and that's what a lot of entrepreneurs are telling us, is that there's just not the full support they need post seed or post Series A.
It's just two things that you just meant, or rather, you made it in a sentence, but I kind of like deduced two things from it. One is that it seems that it was a startling statement, actually. You said it in passing, but it seems true that the funds are actually there. It just isn't finding. So basically, and this research that we have also done at GFA actually shows that there are billions of dollars literally out there available to support African startups. But the second part of what you said, there's some kind of mismatch in terms of investor readiness to support these. Or first of all, that the startups themselves aren't totally ready in terms of the entire from start to finish of the venture capital investor. So we typically say investor readiness. And so you've actually, with one sentence, just said the problem. Boom.
Yeah, and it. I'm sure it's what you see. It's what we hear from entrepreneurs and startups. It's a consistent message out there. But I think it's improving because we're seeing more and more skilled investors entering that are not only able to help entrepreneurs, but also know how to properly structure term sheets and deals that benefit both the investor and their LPs, but also protect investors and are founder friendly.
I see. Okay.
Protect entrepreneurs.
Yes. Could you speak a little bit more about, the entrepreneurs themselves? Is it their fault that they're not ready for these investments, or that they don't understand or know how to structure some of these deals? Or is it the ecosystem and the support that is challenged?
I think it's the ecosystem and support that is supposed to be in place to help guide them through this, because really, in terms of the entrepreneurs, and this is why we really like the space and think that more and more money and investors are going to continue to flow into this region, is because the demographics are so favorable. I think in Egypt, it's like 60% of the population is under 30 years old. So you have demographics that are favorable. Very well educated and talented youth that is building these companies and progressing. So just those two things alone, I think, are going to cause more investment to come, more skilled investors to come that will help educate and bring that knowledge from the West and from more developed ecosystems in the Middle East into Africa, and educate on how to structure deals, how to approach investors, how to talk to investors, and so on.
Just out of curiosity, because you spoke about Modus earlier on, how big is Modus right now?
In terms of fund size, or in terms of
fund size, assets under management, and whatever parameter you'd like to share.
Sure. Yeah. So we're a $75 million fund. We are still in the process of fundraising our first MENA-based fund. So it will be 75 million. In terms of headcount, we have roughly 20 people, I believe. The majority of those are the operations team that supports the company. So it's software engineers, it's product managers, it's marketers.
Take us through the cycle. Two things. On the one hand, what you said earlier on about the support structure for the startups, you virtually made the pitch for GetFundedAfrica, so maybe we should go with funds. but take us through the evolution. So an entrepreneur says, hey, I have this big idea, and then they reach out to you guys. So what happens?
So the cycle for us, they would reach out to us, they're subject matter expert in fintech, for example, and remittances, just as an example. And they've worked either only in corporate jobs and never had that startup experience. So we'll help them first identify who is the persona that you're targeting with your idea, and then doing a deep market dive on is this persona big enough to substantiate a business? Is it even the right persona? Are you targeting the right person? And then understanding the opportunity size, which is one of the most important things that I think founders don't quite put enough effort into. So once you figure out, is there a market for it? Is it an attainable market? And if the answer is yes, then you move on to, okay, let's establish a business. Let's start planning out the product. Let's start investing in technology. But there's really no point to invest in technology or product design until you do a deep dive and understand, is the market big enough, and are you targeting the right persona? And that can include going out and talking to people. So if I'm a subject matter expert in remittances and I know that I want to target blue collar workers in Saudi Arabia that are remitting back to Egypt, as an example, go out and talk to them. Understand what is your pain point? Is the thesis in my head accurate to the people that would actually be using the product? And what we see a lot is people investing in technology and building out an app without actually talking to the people that are going to use it until they built it. So you have this huge investment in technology without actually talking to the people that will use it.
So this failure that happens in terms of understanding how to build an MVP, a minimum viable product, and we see this happening again and again and again, where people build the solution and then they try to fit the solution to the problem. Whereas what they should have focused on, first of all, is the problem. What is the pain point? And then from that problem, then build a solution.
It's the "if we build it, they will come" mindset, which we've seen fail too many times.
Yeah, I think data says that 98% of startups fail within the first 5 years, so pretty much only 2% survive. Speaking of which, have you guys, I know you did mention that Modus is still relatively new. Are there any exits?
Not for our MENA focus fund, but what brought us into MENA was actually, Modus was operational in New York, and there were 3 companies that were US-based companies that ended up exiting into the MENA region, specifically into the UAE. And that is what kind of opened our eyes into this region, and our investors in New York, like, all right, go out there, figure out what's going on, understand if this is actually a real opportunity out there. And that's what brought us out there. And Kareem is Egyptian by birth, so he knew this region very well to begin with, but was just a New York-based fund manager. And so kind of packed his bags and started exploring MENA, and here we are today.
By the way, I didn't mention, but you are in New York, right?
Yes, yeah, we are. Yes, New York.
So right now, for this particular interview, you're right there in New York. How's New York doing, by the way, especially in these unusual times?
New York is doing much better than the rest of the U.S. right now. So everything's kind of coming back to normal, or as normal as it can be, and will be probably for the foreseeable future. But helps to have nice weather so you can be outside.
Has the we're right in the middle of the virus pandemic. Has this slowed down, or has it affected investment into the MENA region, into Africa for you guys? Are you seeing a slowdown in applications and things like that?
We haven't seen a slowdown in companies, and it's been really nice to see a lot of companies taking the initiative to shift, whether utilizing the current technology and being able to pivot to adapt to the new COVID world, or just a wholesale product change. And then we have a number of products or companies that have actually benefited from COVID. So like you have the e-commerce space that has grown tremendously. So in those terms, we haven't seen a slowdown in the number of opportunities. Where we have seen a shift and slowdown is we're also still fundraising. And when you're fundraising from government entities, that's where we've seen a slowdown. We haven't seen the high net worth individuals, that they're still positive on the region, and they haven't really slowed down. So for the most part, not too much of a slowdown.
From the perspective of the entrepreneurs, the VC, the venture capital firm, is the one with the deep pockets and the one with money. So when you talk about VCs also fundraising, there could be a little bit of, I thought you guys were the deep pockets. How does that actually work? Again, from the perspective of the entrepreneurs, to explain it a little bit. How does venture capital work?
Sure. So venture capital, it's deep pockets. It's not as deep as many think. Just the business model of a venture capital firm is very long-term in nature. So it's usually a very skinny team doing a lot with a little. Because the majority of the funds that you bring in, the majority of them needs to be invested in companies. So, but how fundraising works, I mean, we struggle just as entrepreneurs struggle to raise for their startups. We are first-time fund managers in the MENA region, so we struggle just as much of selling our product, our thesis on the region, and it's slow, just like for entrepreneurs. So we tranche it out. So we've closed on our first tranche, which brings in, I think, about a 20% of the 75 million, and then it tranches out, and we have to continue to talk to investors and continue bringing capital. So, and I think that is the case for most venture capital firms, that they've all been in your shoes as entrepreneurs in the fundraising struggles. So we get it.
Yeah. So basically, venture capital firms essentially raise the money in bulk and then kind of like then invest in entrepreneurial firms.
Exactly.
Yeah. Okay. Cool. I think, having said this, we're going to go into a next round. We call this rapid fire segment. And so don't worry, you're safe. But I'm just going to ask a series of questions, and I may pause and ask, to expand a little bit.
Sure.
So here we go. Favorite animal?
Penguin. I don't have a good reason for why.
Okay. Favorite book?
Whew. That's a tough one. I can read anything Michael Lewis. If I had to choose a Michael Lewis book, Boomerang, which was about the European debt crisis, and he dives into each country's history and sees the historical behavior that led to their debt crisis in the early 2010s. But really anything Michael Lewis. He has such an innate ability to take complicated and seemingly boring topics and make them interesting and simple for anyone to understand.
Okay, Michael Lewis it is for everyone that is listed. Favorite sports team?
Boston Celtics basketball.
Okay. Rewind. Favorite sport?
Favorite sport, actually, football. European football.
European football. I was going to say soccer, right?
Yeah. Soccer, yeah.
Okay, so in that case, favorite team?
Tottenham Hotspurs.
Sugar, you're going to disappoint a lot of people.
I know. A lot of Liverpool, Man City probably.
And how do you actually unwind?
That's a good question. For me, it took a while to figure out, but running for me just gives me a chance to clear my mind and let it just wander. And then TV's always, for me, has been a good way to kind of just turn off your brain and zone out.
I like that, turn off your brain and zone out.
But it's an important thing, I think, for all entrepreneurs to spend time on mental health. It's so easy. We've seen it, of the amount of hours we all work to burn out. So it's important to have, even if it's 30 minutes a day, to just kind of just think about nothing, or just let your mind wander and be creative. And a lot of people forget to do it.
Yeah, it's very interesting that you say that, because just today for me at work, I actually, as of course expected, there's always so much to do, and I was struggling to concentrate, and I kind of decided to just take a walk, and that helped to clear things. And so I guess mental health is actually very important in this day and age, and we probably would be, I think data suggests that we're beginning to see a lot of investments in telehealth and things like that. Anyways, I thought that's very interesting. And just to close, is there any advice that you have for the team at GetFundedAfrica?
No, I think you guys are doing a great job, and it's an amazing service that you offer companies. And kind of three things that I always tell entrepreneurs that are in the early stage of pitching, and things that we always see missing, to one of these things missing to a certain extent, is, and we talked a little bit about it, but a deep dive into the size of the opportunity. It's not sufficient, and we see this all the time, is to say, well, if I capture 0.5% of the market, I'll have $10 million in sales a year. That is not a sufficient.
We've seen that too much.
So a deep understanding of what assumptions are you making to understand what your target market is and how that will translate into sales for your company. So that's number one. Number 2 and 3 kind of go hand in hand, but we often see people aren't showcasing themselves as a team, especially as early stage investors. Part of the investment is in you as the individual and you as a team as much as it is of the company. So whether you're a subject matter expert or passionate about solving the problem, showcase that, because we're investing in you. And then the third thing kind of plays off that is tell a story. Your deck should kind of flow through a story of why are you solving the problem, how you're passionate about this problem. And it is very clear to investors right off the bat of whether you're in it for passion as well as being successful in solving a problem, or whether you're in it to get a quick exit, make a few bucks. So the story helps.
Yeah, and it's almost like I keep saying that you're making the perfect pitch for GetFundedAfrica in a way, because on the one hand, we wanted to just be micro VCs, invest in a few startups and all that, support them to get to a certain size, and then now, bring them forward to larger investors and things like that. But we quickly realized that we had to do some work, and have now begun to develop things like courses on MVPs, on market sizing, on investor readiness, and things like that. So perfect. Thanks so much, Simon, for your time. It's been wonderful having you on GFA Attract, talking to our VC. And is there any, beyond just for GFA, any last words that you'd like to share?
Keep plugging away, everyone. It's a hard battle, but the little bit, just incremental goals. Get from 0 to 1 to 2. You don't need to get from 0 to 10 overnight, and celebrate the minor victories, because it's all little milestones, and eventually they add up to a major milestone. So stay positive, and especially now, stay healthy and mentally healthy and physically healthy. It was great as well.
There you have it, everyone. From Simon, stay positive, focus on incremental goals, celebrate your achievements every step of the way. Once again, Simon, thank you so much. Now, if you haven't, remember, visit our YouTube page, GetFundedAfrica, and subscribe. We're going to be having wonderful people like Simon coming along, shared every week. So please hit the subscribe button if you haven't done so already. Thank you, everyone. Goodbye for now.